Corporations don't make a profit, but instead they are using the cheap debt that we have today to fuel their stock buybacks. Is this really sustainable? You came here for the truth, so let me unveil that for you. Today we're going to get into many factors. I'm talking about what's been happening with the repo operations. That has been picking up. I've got something bigger prepared in later videos, but today just give you an update on that. We're going to look at what's happening with billionaires selling off more stocks than they have in years. Okay, we're going to look at this as well. I've got tons of charts. We're talking about corporate profits. We're talking about everything surrounding what's happening in the economy, as well as the potential for a fourth stimulus check. There's so much. Let's get into it right away. Here we have a quick update on the repo operations. This is something I covered back in late 2019. This was becoming hot. I was covering it every single day, and I had a whole bunch of people saying, stop covering it, I'm sick of this. But we need to understand what's going on. This is the failure of the financial system happening right before our very eyes. At the end of this year, we're going to find out some more detail about that. Stay tuned. I'll talk about that more in just a second. This is coming directly from the New York Fed's own website, and you could see right now, May 18th, right there, maturity date, May 19th. So you got the 1 day operation, $243 billion. You go down a little bit further and you're going to see the same type of thing. 1 day again, $209 billion. Come down a little bit further. This was a maturity on May 17th, $241 billion. So this has started to pick up big time. When I was covering this back in the late 2019, we were starting to see these kind of numbers here, and this was starting to worry the markets. And they said, we're just making a technical adjustment. They refused to admit that this is effectively quantitative easing. They did everything. They increased the amount of repos. They did all these different wacky things. I covered it every single day, so you got to go back to that. They get the full detail, the full description. But if you were watching the channel, you know exactly what I'm talking about. Look, this is key to understand. This is basically saving the financial system. And then until we had the QE coming in, this was being the lifeline for the system. Now we've got both QE and the repo happening at the same time. That has never happened before. So this is so important to keep an eye on. I'm going to give you updates constantly on this until it goes away or something major happens. So stay tuned for that. If you want to make sure that you stay in touch with me, you've got to join the Insiders. It's completely free. That's my way of communicating to you directly. Look, what they're doing, the platform that we're on right now, we know that this is unsustainable. So we have to have a direct communication. I've been emailing with people every single day. People are contacting me. This is the way to do it. So you're going to be able to find out what happens at the end of this year. Look, in September and beyond, the repo operations were beginning, and it takes 2 years to actually get that information, to find out which banks were getting the money and everybody involved. So that's going to come up in the next few months, and you want to be the first to get in that information. Obviously, I'm going to be covering it every single day, so you've got to do that. All you got to do is sign up to the Insiders. It's completely free. It's available at themoneygps.com. Look at what's happening here with the valuations that we're seeing today, and understand that the corporate profits, these corporate profits that we are seeing, are not what they're made out to be. The expectations are one way. You look at it on a different level. Nothing is making sense. Take a look at this chart. Valuation extremes, here be dragons. And you're looking at top 1,500 companies, unprofitable each of the last 3 years. And what do? We reward them. We give them more money, more money, more money. It doesn't matter what the companies are making. You see these IPOs of all these big establishments coming out, and then they open up the books at the last minute and they show everybody just before they're about to IPO, just before they're launching on the stock market, and it looks terrible and it looks horrible. And it looks like, oh my goodness, this is a mess, and billions of dollars go into it. And that's just the way it is. So you're looking at the count here with the red dotted line. And of course, as time goes on, there's more and more of those companies, and the total market value in the billions of dollars. Of course, we're seeing more and more capital going that way, even though we should not be rewarding these companies. This is the S&P 500 versus corporate profits after tax. And that orange line, that's your corporate profits after tax. What's going on here? More money is going in, and it doesn't really seem like, things make sense because the stocks are going up, but the profits are not. And there's supposed to be some level of correlation. Of course, there's always going to be fluctuations. Cumulative growth of the S&P 500 versus GAAP earnings. These companies, of course, don't have to apply to GAAP at all. Generally accepted accounting principles. They don't have to do that. They can have two sets of books. When you go to your accountant and you tell them, "Whoa, I have two sets of books. This is what you're allowed to share, and this is for me." What would happen to you? Of course, you're going to be in big trouble, but not when you're one of the mega corporations. No. Small businesses, that's a different story. Small businesses have to follow all these real tight rules. There's no loopholes for them. But the mega corporations, they can do what they want. So you're seeing the same sort of situation here. Corporate debt and profits. Look at the difference. Corporate debt is at such a high level today. Look at the corporate profits. That's the blue line. Obviously, we've got a big issue. Now, the profits may have increased slowly, mind you, over the last few years. But compared to the debt, that's how this is all being fueled. The actual financial system. This is what I don't understand why, at least forget about the mainstream, the alternative refuses to touch on. They talk about how fantastic the economy is, how fantastic everything is, but they don't relate what has actually happened since 2008. The financial system actually did fail. Okay, everything has become a zombie, and so we throw the cheap debt at it because that keeps it going. It's like you have a zombie, it's like you have a corpse, and you're injecting the blood in, and you're saying, well, look, the blood is going around and around, everything is just fine, but then you realize, actually, that's not the case. This is all fiction, but nobody wants to know that, nobody wants to hear that. I know it's not popular. Let's move on. Monthly new stock buybacks. Very important to cover what's happening with the stock buybacks because that is the number one factor here as it relates to who's buying the actual companies. Look, I have made this clear before. I have shown you since 2009, the number one buyer of stocks, it is the companies themselves. The companies themselves are actually buying more stock than institutions, than forget about retail investors and everybody else. That is insane, but that's what we've got to deal with. And you know what? Who cares about it? Because the Federal Reserve is taking care of it, right? Retail investors are doing it, right? No, it's the stock buybacks. That's the key. And look right now. It's off the charts. I mean, just take a look right now. The stock buybacks are going crazy, okay? Then you've got this. It's several charts within this article, Out of Real Investment and Advice. By the way, one of my favorite resources. And if I can, I'll be doing some interviews with this group of people. And, if I can't get Lance Roberts on, I'll do it with somebody else. But they're really key. Look, if I move this over here so my head gets out of the way, we can see that the calculation of corporate profits includes an interesting company not widely recognized in most analyses. If you are an astute follower of our blog, you already know the answer. Most profitable company in the world. Does that shape, does that pattern look familiar to you? As soon as I saw it, I knew exactly what I was talking about. That is the Federal Reserve. When the Treasury Department pays interest on the debt and expense to the U.S. government, the Federal Reserve takes that in as profits. As reported on their balance sheet at the end of the year, the Fed remits a portion of the revenue back to the government. Take a look at that chart. That's just showing you the profits in the billions of dollars. These profits, which are generated by the Federal Reserve's balance sheet, are included in the NIPA measure of corporate profits. As shown, actual corporate profitability substantially weaker once you extract the Fed's profits from the analysis. Isn't that interesting? They do go into a much deeper description here. Quite frankly, I don't have the time to get into it all, but let me just show you this really quickly before we go. To put this into perspective, in 2020, the Federal Reserve generated more income than Apple, Microsoft, JP Morgan, Facebook, McDonald's, Coca-Cola, Walmart, Home Depot, Intel, Johnson & Johnson, Bank of America, Nike, Visa, like I've run out of fingers, Visa, Amazon, and Netflix combined. Wow. This one company or institution, whatever, it's a private institution, that they are generating more profits and they don't even need to exist. There is no reason for this institution to exist. to exact control over you and your family. But they do. Now, what can we learn from this? Well, I think it's pretty clear that we've got a serious problem on our hands, and that exists with corporate debt. Corporate debt's a big problem, and we can cover it or we can ignore it. It's up to you, but ultimately, this is something that is unsustainable, completely and entirely unsustainable. So let's get into the money GPS insights. I think number one is very clear, and that is corporations are using debt. They're using this debt to finance all of their operations. They are buying back their own stocks. Why would they do this? Because it pushes the stock price higher, and the insiders get compensation based on the stock hitting certain prices. So they can use this to finance their lifestyle, and that's just the way their compensation works. They often don't get a big salary. They want the compensation through the stock because, of course, it's at a lower tax. So this is something that people need to understand that's happening today. When we look at dividends, number two, I think it's very clear to see that these companies, whenever the next crisis hits, are going to stop those dividends. You need to be aware of that. People don't understand how this works. Yes, they may be given a dividend today. Tomorrow, we do not know. So you can't necessarily rely on that. Some companies have been given dividends for decades and decades and decades through crises. I get that, but we never necessarily know. So watch out. It is very important not to make assumptions about the future. And then we'll need to talk about number three, and that is buying assets today, right now, that are considered to be undervalued and may have a higher perceived value in the future is absolutely wise. If you're getting into something at the highest price it's ever been, yes, it can go even higher, but generally the consensus in the investment community is that we should be buying things at an attractive price, not necessarily buying low, selling high, but we need to look at something that is at an attractive price, a good value, and then be able to accumulate more of it when we think that that price is around that valuable price range. And this is something that you have to look at the statistics, the indicators at that given moment, but ultimately trying to determine what is undervalued now is the ultimate key. If you want to support this channel, simply just give this a thumbs up, okay? Give it a thumbs up and you help me out. I have my free e-course. It's available at the amazongps.com to teach you how to sell stuff online. Have you seen this video yet? If not, you definitely want to check it out. Click it. It's talking about Michael Burry and his short position on Tesla and inflation, where he predicts that to go. Take a look at it, click it. I'll see you there.